All right, so we've got a mountain of intel on Bitcoin and Ethereum to unpack today.
Yeah, it looks like someone's been busy curating quite the collection of takes on the future of crypto, huh?
Seriously, and everyone seems to be laser focused on BlackRock and what their moves might mean for the markets.
Right. It's like everyone's trying to connect the dots between BlackRock's activity and potential price movements.
Oh, absolutely. And speaking of price movements, one article claims Bitcoin could hit $80,000 as soon as next month. Next month.
Yeah, I saw that. Bold prediction for sure.
It doesn't stop there, though. They're also saying $100,000 per Bitcoin could be a reality by like early 2025.
Well, we know the crypto market's known for its wild swings, so anything's possible, I guess.
It's a roller coaster, that's for sure. But okay, let's talk BlackRock.
Yeah.
Because these sources make a big deal about their CEO, Larry Fink, calling Bitcoin, quote, an asset class in itself, end quote, even comparing it to gold.
Yeah, and that's a pretty significant statement coming from, the head of the world's largest asset manager. When Larry Fink talks, people listen.
Exactly. So does BlackRock buying into Bitcoin send a signal to other institutional investors then? Is that what's going on here?
It potentially does. I mean, BlackRock is known for, being very strategic, very calculated with their moves. So yeah, others might see this as a green light to jump in.
Okay, so that could be a factor in those price predictions then?
Yeah, I'd say so. More institutional investment usually translates into, higher demand and potentially higher prices. It's a
Yeah.
classic supply and demand thing.
Right, of course. And it's not just Bitcoin they're interested in either, right? I mean, there's been a lot of buzz about BlackRock dipping their toes into Ethereum as well.
Absolutely. While Bitcoin gets a lot of the attention, Ethereum has its own unique strengths, especially when it comes to things like DeFi, decentralized finance and smart contracts. And it looks like BlackRock sees potential there.
It's interesting because one source mentioned BlackRock talking to major crypto exchanges like Binance, OKX, about using their own token as collateral for futures trading. Now, I'll admit I'm a little fuzzy on what that actually means.
Okay, so essentially, it suggests that BlackRock is looking at ways to bridge traditional finance with the crypto world. Like, imagine using your stock portfolio seamlessly within decentralized applications.
Oh, okay. So it's more than just investing in crypto. It's about finding new ways to actually use it within the existing financial system.
Yeah, exactly. And this actually ties into something Larry Fink has talked about, tokenizing traditional assets,
Yeah.
like stocks and bonds on a blockchain.
Okay, hold on. Before we get ahead of ourselves, can we unpack this whole tokenization thing? Because I'm not going to lie, I'm still trying to fully grasp it.
Sure. Imagine taking a real-world asset, say a share of Apple stock, and creating a digital version of it on a blockchain. So that digital token then represents ownership of that share.
So instead of a paper certificate, I'd have a digital token.
Exactly. And this could make transactions faster, cheaper, and more transparent, opening up a world of possibilities for, global markets and investments.
Okay, I can see why people are excited about this, but what does this mean for the average investor, like someone who's already dabbling in stocks and bonds?
Well, imagine being able to buy fractions of real estate with a few clicks on your phone, or investing in a startup across the globe as easily as ordering a pizza. That's the kind of potential tokenization has, democratizing access to investments that might have been out of reach before. It could be huge.
It sounds almost too good to be true. Are there risks with this tokenization thing? What about like security or
Yeah.
even just understanding how to navigate all of this?
Right, and that's a really important point. With any new tech, there are always challenges, right? Security is paramount, especially when you're talking about valuable assets. We need systems that prevent fraud and ensure that these digital tokens are legitimate.
And what about actually using these systems? Because not everyone's a blockchain expert.
Exactly. User experience is key.
Yeah.
If this is going to be widely adopted, it needs to be easy for everyday people to understand and use, not just the tech savvy.
And then there's regulation, right? Governments tend to have something to say about new financial technologies
Yeah, for sure. Regulation is always a bit of a double-edged sword. On one hand, it can provide stability and attract bigger investors.
because they know the rules of the game, right?
Exactly. But on the other hand, too much regulation can stifle innovation and slow down adoption. It's a tough balance to find.
Sounds like it. So it's not just about the technology itself, it's also about how it's implemented, regulated, and adopted.
Absolutely. And it's not just up to governments and regulators either. The crypto community, the developers, the entrepreneurs, everyone has a role to play in shaping this future responsibly.
Okay, so we've got a lot to unpack here. We've got Bitcoin potentially skyrocketing, Ethereum quietly building its own empire, and this whole tokenization revolution brewing.
Don't forget those spot Bitcoin ETFs being approved by the SEC. That's huge.
Oh man, you're right. That completely slipped my mind. Can you remind us what those are all about and why that's such a big deal?
An ETF, or exchange traded fund, is basically a basket of assets that you can invest in through a regular brokerage account. So a Bitcoin ETF would track the price of Bitcoin.
Like a simpler way to get in on the action?
Exactly. And the SEC approval means it's becoming way more accessible for both individual and institutional investors.
Which could mean a lot more money flowing into Bitcoin, right?
Potentially, yeah.
Yeah.
It's all about access and, frankly, familiarity. ETFs are a known quantity for a lot of investors.
This is fascinating stuff. I'm definitely feeling more informed already.
Me too. And we're just getting started.
All right, then, let's dive into those Bitcoin price predictions in more detail after a quick break. What do you say?
All right, let's dive into these Bitcoin price predictions.
Yeah, $80,000 Bitcoin my next month. It's a lot to wrap your head around.
It definitely gets your attention, but it's important to remember these are just predictions, right? And the sources we're looking at, they're basing these numbers on a bunch of different factors all happening at once.
Like what? What kind of factors?
Well, we've got BlackRock making moves, the SEC giving the green light to spot Bitcoin ETFs, and just this overall surge in institutional interest around crypto.
So it's like a perfect storm of like good vibes and potentially a lot more money pouring into Bitcoin.
Exactly. And historically, when we see this kind of alignment, it's often led to some, shall we say, enthusiastic price movements in the crypto market.
But what goes up must come down, right? Isn't that how it always
That's
goes?
the age-old question, isn't it? And the crypto market is definitely known for its cycles. We see those bull runs, everyone gets hyped, but they're usually followed by a period of correction.
Okay, so how should we be looking at these predictions then? Like, should I be taking out a second mortgage to stock up on Bitcoin?
Whoa there, I wouldn't go that far. Seriously though, it's never a good idea to make rash financial decisions based on predictions alone. Crypto can be volatile, remember.
Right, of course.
Any investment should be made with a clear understanding of your own financial picture. Your goals, your risk tolerance, all that.
It's about balancing the potential upside with the very real risks involved.
Exactly. And speaking of risks, the sources do mention some potential speed bumps that could throw things off course.
Oh, like what kind of speed bumps are we talking about?
Well, for one, there's always the possibility of unexpected regulation. Governments are still figuring out this whole crypto thing, right?
Yeah, that's true. They could always come in with new rules that spook investors.
Precisely. And then there's always the risk of security vulnerabilities,
We're
right?
talking about hacks and things like that.
Yeah. Unfortunately, those are still a reality in the crypto world, and they can definitely impact prices. So yeah, those Bitcoin predictions are exciting and all, but we got to be realistic too. Crypto's full of surprises.
Okay, good to keep in mind. Now, what about Ethereum? We haven't talked about them as much.
Right. So while Bitcoin's been hogging the spotlight, Ethereum has been quietly building something special.
Yeah, with the whole decentralized applications, smart contracts thing, right? I still feel like I'm learning about that.
It's a whole other world. But basically, Ethereum allows developers to build these really cool applications that could change how we do almost everything.
Like what? Give me an example.
Okay, so the sources talked about supply chain management. Imagine tracking products from the moment they're made all the way to your doorstep, all on the Ethereum blockchain.
So you know exactly where your stuff is coming from, and there's no way to cheat the system.
Yeah, exactly. Plus, it can be applied to so many other things. Digital identity, voting, you name it. It's about automating trust and removing the need for middlemen.
Okay, so Ethereum's potential isn't just tied to its price going up, it's about what can be built on it.
Absolutely. And with big players like BlackRock showing interest, it's clear that people are starting to recognize that potential.
This all sounds great, but I also have to imagine there are challenges. Like, what's holding Ethereum back?
Well, one big one is scalability. Right now, Ethereum can only process a certain number of transactions per second.
Oh, right, I've heard about those gas fees on Ethereum. Like, sometimes it costs a lot to actually use the network.
Exactly. Those gas fees are due to network congestion. But the good news is, developers are working on solutions to make it faster and more efficient.
So hopefully those gas fees will come down and Ethereum can keep growing.
That's the goal. And then there's competition, of course. There are other blockchain platforms out there all vying for the top spot.
So there's no guarantee that Ethereum will be the ultimate winner in the long run.
Exactly. It's still early days in the world of blockchain, and there are a lot of different horses in the race.
Well, you've given me a lot to think about, that's for sure. My head's spinning a little bit with all this Bitcoin, Ethereum, tokenization talk.
It's a lot to process for sure. Like drinking from a fire hose sometimes, trying to keep up with it all.
But hey, that's what makes it exciting, right? This whole crypto and blockchain space is constantly evolving, and we're witnessing it all unfold in real time.
Exactly. It's like we're watching a new chapter in financial history being written right before our eyes.
So what you're saying is buckle up, because things are about to get even wilder.
Something tells me you're right about that.
Oh, okay.
Now, before we move on, you mentioned something earlier that I wanted to circle back to. The SEC's approval of those spot Bitcoin ETFs.
Oh, yeah, that's right. I got a little sidetracked there. Remind us again why that's such a big deal.
Right. So, as we discussed, an ETF is basically like a basket of assets, and in this case, it would hold Bitcoin. And because it's traded on traditional stock exchanges, it's much more familiar and accessible to a wider range of investors.
Okay, so easier to buy, easier to sell. Got it.
Exactly. And with the SEC's stamp of approval, it lends legitimacy and could lead to a massive influx of institutional money into Bitcoin.
So potentially huge for the price of Bitcoin in the long run.
Potentially, yeah. Now, shifting gears a bit, let's talk more about this whole tokenization thing. You seemed intrigued by that earlier.
Oh, yeah, for sure. I'm still trying to wrap my head around it all, but the possibilities seem endless.
It really is a game changer if you think about it. We're talking about taking any asset you can think of, real estate, art, even music rights, and turning it into a digital token on a blockchain.
Okay, so instead of owning a physical painting, for example, I could own a digital token that represents a share of that painting.
Exactly. And that token can be traded instantly, securely, and globally 247. It opens up a world of possibilities for investors both big and small.
And you mentioned real estate earlier. That's a big one, right?
Huge. Imagine being able to buy a tiny slice of a skyscraper in Dubai or a vineyard in Napa Valley, all with the click of a button. Tokenization could democratize real estate investing like never before.
I'm starting to see why people are so excited about this. It's like we're on the cusp of a whole new financial system.
It really does feel that way, doesn't it? And these sources you've gathered, they do a great job of capturing the magnitude of what's happening.
Yeah, they really do make you stop and think about the future, both the potential and the challenges that lie ahead.
Absolutely. And ultimately, that's what makes this whole space so fascinating, right? It's full of unknowns, but the possibilities are truly mind-blowing.
So what you're saying is we better buckle up because we're in for one heck of a ride.
I'd say that's a pretty safe bet. Now, I know we need to wrap up soon, but I wanted to ask you something before we go.
Yeah, what's on your mind?
Given everything we've discussed, everything you've read in those sources, if you had to pick one key takeaway for our listeners today, what would it be?
Yeah, for sure. There's definitely a lot to process, but I don't know, I kind of like riding this wave of information.
I hear you. It's exciting. It feels like we're witnessing something truly groundbreaking.
Totally. Okay, so as we wrap things up here, I have one final question for you.
Hit me with it.
If you had to pick just one thing, the most important takeaway from all of this Bitcoin, Ethereum, tokenization talk, what would it be? What should our listeners really remember from all of this?
That's a tough one. But if I had to choose, I'd say it's this. The future of finance isn't set in stone. It's being shaped right now as we speak, and we all have a say in how it unfolds.
Okay, I like that. It's not some predetermined path. We're actually part of the journey.
Exactly. And it goes back to Larry Fink's vision, right? Tokenizing everything. Imagine a world where investing is more accessible to everyone, where you can own a piece of anything, from a Picasso to a piece of prime real estate, all through these digital tokens. It's a future with a lot of potential, but also a lot of challenges to navigate.
Definitely. And these sources we've been digging into, they really highlight both sides of that coin, the good and the bad.
Yeah, they do. It's not about blindly jumping on the bandwagon. It's about being informed and understanding the implications, which is, kind of the whole point of having these conversations in the first place, right?
100%. So for everyone listening, keep those brains engaged, keep asking questions, and most importantly, don't be afraid to dive in and explore this exciting new world for yourself. Thanks for joining us on this wild ride.